So, I mean, honestly, a lot of it is understanding these terms because I hear all this stuff and I'm like, what the hell is that? So,
Hmm.
understanding the day trading, the swing trading, and the investing, that was huge. Really big for me to learn. There's the paper trading because that makes me
Hmm.
feel a little less scared to do this. And then I really, I'll be honest, I enjoyed learning about the candlesticks. Oh, the other thing I loved learning was stop loss. That was great too,
Yep.
understanding that piece because all of this makes me feel a little safer with all
Yeah.
of
And the stop
this.
loss is our best friend.
I mean, granted, this doesn't mean I can go out and trade, but it's helping me build that foundation so I can understand what the hell you're talking about and what's actually going on.
Okay. So let's get started. So go ahead and what questions you got after last time and
I have
come
a
to your head and all that?
million. But also a lot of it is just terms that I keep hearing and stuff, and
Yep.
I'm like, well, what's okay, first of all, this sound maybe dumb, but here we go. So what is the difference between investing and trading? Like you hear both those terms, and is there a difference?
Yes. Okay. So there's really three types of trading.
Okay.
Okay. There is day trading.
Yep.
All right. That is just the markets are open from 9:30 a.m. Eastern to 4 p.m. Eastern.
Okay.
Okay, those are the regular market hours.
Okay.
So all a day trade is a position that you open, so like you would buy,
Okay.
and then you would sell that position all within that same
Day.
day.
Okay.
So if you hear
Within
the
the same
term day
day.
trade, that's all
Yep.
that means.
So it's within that same day. Okay.
Yep, that's all a day trade is.
Okay.
Okay, and then there's a swing trade.
Okay.
Okay, a swing trade is where you open a position and then this is just an average. On average, you hold it like 3 to 5 days.
Okay.
Okay. You can hold it as long as you want, but on
Okay.
average, a swing trade lasts about 3 to 5 days, and then you end up selling it.
And then sell. Okay.
Yeah. So it's bigger than a day trade,
Okay.
but that's what's considered a swing trade because
Okay.
you're swinging it through a few days,
Okay.
right? Now, an investment, okay, is that is what I determine like a long-term type thing. Okay,
Okay.
where you might hold it for years and years. Like you have um
Like
a company.
Tesla, something like that would probably
Exactly.
be.
You have a
Okay.
company you like, um, and you invest in that company on a regular basis. Like I've
Okay.
got five different companies or five different stocks that I invest in on a monthly basis. Actually, it's today, the 7th of
Okay.
every month. I have X amount of capital that just gets dispersed to like five
Between
different.
those seven. Oh, okay. Got it.
Yeah. And
Those are
that, those
investments.
are investments, right?
Okay.
Okay. Now, another big thing, and this is what I think the big difference between trading and investing.
Yep.
Okay. When I think trading, okay, that means I have a limited loss that I'm willing to take.
Okay.
So say I get into a position at $10, right? I buy at $10.
Hmm.
Well, if that stock would drop down to $9, I'm going to get out of it.
Okay.
I have a controlled amount of loss.
Okay. And you think about that ahead of time. Like you
Yeah,
go
that's
into it and
all.
you say, I'm gonna buy it at 10 and the most I'm willing to let it go down to is 9.
Exactly.
Okay.
And I consider that more of a trade. So
Okay.
like your swing trades, your day trades, we call them a stop loss.
Okay. Stop
Okay, that's the
loss.
term, stop loss.
Okay.
And what happens is when, well, I'll just go down this road with you. So on the platforms that we trade on, right?
Yep.
So let's just take a round number, right? Let's take 100 shares. Okay,
Yep.
round number. So in your platform, you set it up, and it's really easy. It's a couple mouse clicks. This sounds way more complicated than it is, but
Okay.
if you can use a calculator, you can do
Okay.
this.
Okay.
So say you're going to buy 100 shares at
Okay.
$10,
Okay.
right? So you're investing $1,000.
Yep.
Am I doing my math right?
Yep.
Okay. Well, if that's, you want to risk no more than $100,
Okay.
right? So
Yep.
if it goes down to 9, you see you've lost $1
Yep.
per
Yep.
share.
Yep.
Well, when it gets to 9, it will automatically sell itself
Oh, and you determined that ahead of time.
ahead of time.
Okay, got it.
Right. So it takes your emotions
Out. But
out. So when
but
I'm considering
okay.
a trade, like a day trade or a swing trade,
Yep.
those are going to have those protection in place
Okay, ahead of time.
ahead of time. Now, on an investment, I don't have any sort of
You
like,
don't have a stop loss.
no, I don't have a stop loss in place or anything like,
Okay.
because it's longer term. I'm thinking years, the market's going to go up, it's going to go down, it's going to go up, it's going to go down. So I'm not too concerned about that with that.
So quick question, because I got to ask you before I forget. So let's say you bought it at 10, your stop loss was 9, but in order to sell it at 9, there has to be buyers. I mean, is there always going to be people that'll be willing to buy it at the 9?
Yeah, 99% of the time, because the stocks that we trade, okay, you want to, and we'll get into this later, but I don't trade stocks and I don't advise anyone trading stocks that don't have at least 1 million shares traded every day.
Okay.
Okay, because there's, like, if you look at some of them, it'll blow your mind. Like the volume today, all volume means is the number of shares exchanged.
Okay.
Like the volume today on Tesla, like
Yeah.
this is so far there's been 71 million shares traded.
Today, so far, and it's only
It's only 1039. Yeah.
uh,
Its average volume, its average number of shares traded per day, 130 million. So you
so
can
the
see
geez.
I don't look at any, I don't want anybody to trade, or myself, if I'm teaching somebody, I look for stocks that at least have at least 1 million shares traded per day, because then you're almost guaranteed to get your price, right? If
And
you're, do you see what I'm getting at? Because
I
you're going to have
do. Yep.
buyers there.
Because you are. And so when it reads, and I sorry, I think way too far into this.
No,
So let's say you're looking at the volume and it says 1 million shares traded. Does that mean 1 million bought and sold? Like it has to
yeah,
have both pieces of the transaction to be
yep,
considered in the volume. Got it. Okay.
yep. Because
Okay.
every buyer has to, if the volume was 1 on a stock, that would mean there was one buyer sold one
Once.
and one seller
Yeah,
exchanged one share.
that's it. Okay.
Yep.
Okay.
Yep. So therefore, to go back to your question, are there going to be buyers at those stop loss levels? Well, as long as we're trading the right stock
Yeah.
that has enough volume, 9 times out of 10, it will. Now, there might be a little bit of slippage, and all slippage is like if you set your stop loss at $9,
Yeah.
maybe it gets filled at 8.99 or
Okay. That
9.01. Just
okay. Close enough.
yes. So
Okay.
that's the dip. But again, investments, I don't have any of that,
Okay.
right?
So I guess I mean it's a big broad question, and you're probably gonna say let's get to that later. How do you determine with a stock if you're gonna do day trading, swing trading, or it's gonna be an investment?
That's as far as what you will find as we move forward is there's certain stocks that are more conducive to being able to day trade them. Okay.
Okay.
If you're day trading, now there's lots of other actually better instruments to trade day trading than stock.
Okay.
Okay. There's futures instruments, there's options, there's a bunch of other stuff out there.
Okay.
But if you're day trading stocks, you'll find that there's a kind of a basket of them that are the most conducive to day trading, because you
Okay.
want movement, right? When you're
Right.
day trading, you don't want to get into something and have it sit within 10 cents of your entry for the next 5 hours,
Right.
right? You
Okay.
want ones that
Want lots of movement. Okay.
movement, right? We call that volatility.
So you study the stocks obviously before you invest in them, and you study and see is there a lot and are can we at some point look at that and see how you're reading that and how you're seeing if there's lots of movement?
Yeah, this is really easy. This is just very simple eyeballs. Let me do this real quick. Okay.
Okay.
So let's look at this. And I know you don't know what candles mean yet, but just
Nope.
think up and down. Okay, that's all you got to do. Think up and down.
Okay.
So here's Tesla on a 1 hour chart. Okay, all that means is every one of these candles is an hour long.
Okay.
That's all it is. So you can see this goes just from today. It's
Okay.
gone from $214 at the low, and the high of the day is $252. So it's
Wow.
gone 35 bucks about,
Yeah.
right? So it's moving. It's moving around fast. Okay.
Okay.
And that's on the 1 hour chart. Now,
Okay.
if we zoom in, let's zoom in to like 3 minutes. So every one of these bars is 3 minutes.
Holy cow.
Okay. So you can see how much it moves,
Yeah.
right? That's what you're looking for if you're day trading, right? Well,
Okay.
let's look at this other stock that I keep an eye on for different reasons. This is Beyond Meats. Have you ever heard of Beyond Meats? They make like at the grocery store, they make like
Yeah, yeah, the fake meat.
the fake
Hmm.
meat. Okay. Well, here's it. Well, look, it's only gone from $2.60 to $2.90.
Okay, so not a lot of movement.
Not a lot of movement.
Okay.
To make any money, you'd have to trade a bazillion shares on this thing.
And it's only been, I'm looking at the key stats. So the volume of 683,000,
Yep.
that's today.
Yeah, that's today. See, there's not a whole lot.
Okay. So
There's not a
you,
whole lot of volume,
okay, got it.
right? So when we look for stocks that we want to day trade, we just look for movement, right? We
Okay.
want certain stock. Look at Apple.
Goodness sakes, that's crazy.
Yeah, that's movement, right? But if you're once you kind of develop into your trading and you're understanding all this stuff, you'll see how we want this because it's very difficult for us to make money if we've got something that doesn't go anywhere,
Right. Okay.
right? And what you'll find as you progress through, if you're day trading stock, there really becomes kind of only a handful that you pay attention to. You're
Okay.
not looking to reinvent the wheel, right?
Okay.
You're kind of looking, if you're day trading stock, you'll usually have like maybe 5 to 10 that you just kind of keep an eye on,
Okay.
right? Because basically, and I hate when we're day trading, okay, if you're day trading, you literally could give two hoots about what company it is. Because when
Okay.
you're trading on such a small time frame, like a day,
Yeah.
you don't really care what their balance sheet reads, right? Because you're just looking for the intraday
Okay.
movement. Now, if you're on the investing end of this spectrum, then
Then
yeah,
you
you want to
care.
know,
Okay.
are they a good company, et cetera, et cetera.
A- And with day trading, I mean, in a day, can you make decent money, or is it just minimal because it's just within the day, or is there enough of us?
You can make very, very good money day trading stocks, but the amount of capital you have to lay out to make that money is really high. Like if you wanted to buy 100 shares of Apple right here to
Yeah.
trade, right? You'd have to lay out $18,000 to buy 100 shares of Apple.
Yeesh. Okay.
Okay. But there's and again, we'll get into this when we get into more intermediate stuff, but there's way better ways and other instruments to trade Apple that requires not
Well,
even a tenth of
oh,
that capital.
okay. Okay.
Okay. And that's when we get into options, that's
Okay.
what options are.
Okay.
Um, so yes, it's there, but using the actual stock, like I said, you have to lay out a lot of capital to do it,
Yep. Yep.
right? So this is just me personally. I use stock, like I buy stock as my longer term stuff,
Okay.
right? Because do you know what dollar cost averaging means?
Mm-mm.
Okay. I will point, because this kind of goes along with your investment question. Okay. So what I do with stocks, and this is all stuff you need to know anyway. So if we go a little out of order, doesn't matter, right? You got
Fine.
to know it anyway. So if you hear the term dollar cost averaging, okay.
Okay.
Well, here, I'll just show you this. I don't care. So Exxon is one of the companies that I invest in
Invest. So
every,
longer term.
yes, every month.
Okay. Okay.
Okay. So let's go to a weekly. Okay,
Okay.
so this is a weekly chart. So every one of these little candles you see
Yeah.
is a week long. Okay.
Okay. Got it. Okay.
So let's say, okay, I'm investing, let's say I'm investing $100 every single month on the 7th. Okay.
Okay.
And it's just $100 even.
Okay.
So if that $100 was invested today, I would buy, here's the price of Exxon. Okay. I
102.
would buy almost a whole share.
Yep.
Okay. If let's look at this, let's just do this. Let's look at the 7th of, let's go down to the daily. This will make way more sense this way. All right. So this is a daily chart. So every one of these
Is a
candles
day.
is a whole day. All right.
Okay.
So let's go to March 7th. There's March
Okay.
7th right there.
Okay. Okay.
Okay, so on March 7th, the price was 109, let's call it 109.
Okay.
All right. So if I'm investing $100 on that day, I bought 0.91 of a share.
Okay.
Okay, so I bought 0.91 of a share. On February 7th, which was back here, the price was 108. So I bought about 0.91 of a share
Okay.
there. Today, right, it's down at 102.
Yep.
So I bought almost a whole share. Okay.
Okay.
Okay. So what dollar cost averaging does is when prices, if you're investing the same amount every single time you invest, right?
Okay.
So like $100.
Yep.
So when price is lower, that $100 is buying more.
Right.
When price is higher, that
Less.
$100 is buying less.
Yep.
So you're averaging your price. You buy more when it's lower, you buy less when it's higher. So that average price, like here's my average on Exxon right now, 105.95. That's my average.
Okay. Okay.
Okay. And then today it bought more. So my
Yep.
average now, since I bought more today, my average is going to come down
Okay.
because I'm buying more when it's lower and less when it's higher.
Yep.
It's like going to the imagine this. It's like going to the gas station, and every time you put in gas, you put in
Ah.
$10.
Yep. Sometimes you get more, sometimes you get less with that $10.
There
Okay.
you go. And it
Yep.
all ends up averaging out. That's
Got
what
it.
dollar cost averaging is. So over time, right? Over time, if you're investing the same amount all the time, you're going to be buying more when it's lower and less when it's higher. So your average cost is always going to be to the better side of
Yep.
things
Yep.
as it's going up.
Yep.
So that's how, you know, in my mind, that's how I like to invest because I don't have to think
Okay.
about it. It's just automatic. The math works out for me, right?
Okay.
So that's how I look at the investing part of it.
Okay.
Okay. So that is what dollar cost averaging is. Think of the gas station, you put in $10 every time. Sometimes you get
Yep.
more, sometimes you get less, right?
So every month you do investing on the 7th, regardless of where the prices are. You invest in the same stocks every month on the same date, no matter what.
Yep.
Got
Yep.
it.
That's how
Okay.
I do it. Now,
Okay.
the only caveat to that is if I'm, checking on these stocks or whatever, and I see that they're at a really, really good buying opportunity,
Yep.
I might, in the middle of the month, throw a little bit more at it.
Okay. Okay.
But the overall profit of it comes from just the same amount all the time.
Okay.
Because the average is going to work out in your favor. And again, that's the difference between investing, right, and trading.
Got it. Okay. Okay.
Yeah, that's how I do it. Like, imagine, take like a Tesla, for example, and it's actually Tesla's at a 50% off sale right now.
Right.
But if you were just investing for 10 years, the same amount every month, you're going to be way ahead of the game.
Right. Okay.
Right, because of that
Okay.
average. Yep.
Okay.
Okay, so what else we got?
So you yourself, you do all three. You do
Mhm.
investing, you do day trading, and you do swing trading.
Yep.
Got it. Okay. Okay. That makes sense. So now I understand the difference between the three.
Hmm.
What was my next question? I wrote them down so I know
Okay.
I will forget. Um, I already looked. You already taught me what a stop loss is. You said we'd get to a later date how to talk about the candlesticks.
Well, here, we can do
Yeah.
that right now. That's really
Okay.
easy.
Okay.
Okay. That's really easy. Okay. So, and this is something you have to know. A
Right.
candlestick is very, very simple. Okay.
Okay.
We'll just take this one, for example. The candlestick is based on whatever time frame you're looking at. Like right now, I'm
Okay.
looking at a daily chart. So this
Yep.
candle is 1 day. Okay.
Okay.
So when we have a green candle like this, I think
Yep.
this is green. I'm colorblind. This is green, right?
Oh, it's yellow.
Okay, yellow. When we have a yellow candle like this, I know
Okay.
these are red, right?
Yep. Red.
Okay, I'm good there. Okay. So this whole price or this whole candle is 1 day. So
Okay.
when we have a green candle or a yellow candle, the body of the candle, that just means during this day so far, we opened the day at the bottom right here, at
Okay.
the bottom of this body.
Okay.
Okay. Now, some people call these wicks on the candle.
Okay. Okay.
I like to call them, I call them wicks, but I think the term shadow paints a better picture
Yep.
because all this is price opened here. And during the day so far, price has traded all the way down to this level.
Yep.
So that's a shadow of where price has been during the day so far.
Okay. Okay.
Okay. And it traded all the way up to here so far today, to the top of
Okay. Yep.
that top of that wick. So that's a
Yep.
shadow of where price has been on the upside.
Okay.
And the top of the body right now is just where price is right now.
Got it. So at one point today, it traded at almost 105.95,
Mm-hmm.
but right now it's at 102.
Yep. Yep.
Okay. Got it. Okay.
Now, if we
And
look at a candle,
okay.
a red candle,
Yeah.
like this is Friday.
Yep.
So on Friday, we opened, see how on the green or yellow candles, we open at the bottom. On
Yep.
a red candle, that means we
Oh.
opened at the top of the body.
Oh, okay. Bottom. Red, we open at the top.
Yep, top of the body. So you can see on Friday, we opened here, we traded up
All the way up.
all the way up,
Yep.
and then
And
we traded all the way down to here,
right. But
and
it
then we
ended.
closed the day right there.
Okay. Got it.
So you'll hear this called the candle's body,
Yep.
and then these are the wicks
Yep.
or the shadows. I just like
Got it.
shadow. It makes more sense in my head because that's a shadow where price was.
Okay. Makes total sense. Okay.
Yep. So you can see on a day like this, right? We opened at the bottom because it's
Yep.
yellow. We
Yep.
opened at the bottom. We traded all the way up here,
Yep.
traded all the way down here.
Yep.
And we closed the day almost right at the same spot
Okay.
that we opened.
Okay.
To see how little the body is.
Yep.
So we opened right there and then we closed.
Yes.
We did all
So,
this moving around. We did all
yeah.
that moving around and we ended up right about where we started.
So what's better to see? Do you like seeing the body to be bigger or smaller when you're analyzing a stock?
All the size of the body, there's lots of different candlestick patterns that we'll get into.
Okay.
But all you need to know about like the size is the range of the day. So like this day had a much bigger trading range,
Yeah.
right? I mean, we started here, we went all the way down to here, went all the way up to here, and then closed right there.
Right.
We had a much larger trading range that day than say this little guy.
Okay.
We didn't really go very far,
Right.
right? So that's all the size of the body means. You'll hear the
Okay.
term, if you ever hear that somebody use the term ATR,
ATR. Okay.
yeah, you'll hear that term a lot. All ATR is the average true range
Average true range.
of
Okay.
whatever time frame you're looking at.
Okay.
So like on a daily chart, like we're looking at a daily chart, the ATR, the average true range, would be whatever time frame. So let's, like you would say, okay, from March 1st to March 31st,
Yep.
what was the ATR? And it would, there's an indicator, and it would compute, well, the average true range, the average range that it moved in a day was X amount in that
Okay.
time frame. That's all the
Okay.
average true range is,
Okay.
right? It's just the average. If you took all the candles, divided them by 30 or 31, whatever, 20 trading days in a month, it'll spit out a number and say, okay, on average, this thing moves about X amount per day.
Okay.
So, and then you can see the higher the ATR, higher the average true range, the more volatile and up and down that stock moves.
Yep.
If you
Okay.
have a average true range of like 20 cents in a month, you know that thing doesn't move very far.
Right.
But if you have the average true range of $10, that means on average every day it's moving
A
10
lot.
bucks.
And what's better to be, I mean, which one's better? To have one that just has a large amount of movement in a day or one that barely moves?
Well, again, you have to look at what type of trading you're doing.
If you're doing day trading, swing trading, or investment.
Yeah,
Got it.
on
Okay.
investing, I don't really care if I'm investing, I'd almost rather have it just kind of creep up forever.
Right. Okay.
It can move like 20, 30 cents every day for however long. But when you're day trading, right, or swing trading, you want the larger movements.
You want the large. So when you're analyzing stocks and you're seeing one that has a lot of movement, is that how you decide if it's going to be day and swing trading as opposed to an investment?
Yeah, usually.
Okay.
And the way I look at like day trading and swing trading is I risk the same amount of dollars, okay, on every trade I make. All right. And what I mean by
Okay.
that is, excuse me. And once you're learning about the chart and where to put your stop loss,
Yep.
so now that you know what a stop loss is, so if I'm trading a stock, let's take our $10 stock, right?
Yep.
If I'm trading our $10 stock and I'm going to set based on the chart my stop loss level, like say in an example like this, we know when it comes down here,
Yep.
it seems to bounce,
Yep.
right? So if I get into a trade, I might want to put my stop loss level below that because I know
Okay.
it's probably going to stay above this level.
Okay.
Are you following me so far?
Yep. Yep.
Okay.
Yep.
So let's say that to put a proper stop loss, let's say that's $2 away.
Okay.
Okay, say it's $2 away.
Okay.
And I don't want to risk more than $100 on every trade.
Okay.
So I'm only going to be able to trade 50 shares.
Okay.
Are you following me? Because
Yep.
my stop loss is $2 away.
Yep. Yep.
So I don't want to lose more than $100.
$100. Yep.
So now if I make a trade and my stop loss is only $1 away, I can trade 100 shares.
Yep.
Do you see what I mean?
Yep. I
So,
get that.
so regardless of how much, you know, it's moving and all that,
Yeah.
like if I have a smaller stock that say my stop loss only say it doesn't move very much and my stop loss only needs to be 50 cents away.
Yep.
Well, then I can use a lot more shares
Mm-hmm.
because but I'm still risking $100.
Yep.
You see what I'm getting at?
Yep.
So
Absolutely.
there's opportunities, in all different types of instrument or all different types of stocks. But that's the one consistent where a lot of new people get themselves into trouble. Okay. Because they
Okay.
think that on every single trade, they need to trade 100 shares or 10
Okay.
shares or 50 shares on every single trade they do.
Okay.
Right. Well, the math doesn't really work out for you because one time you might lose $100. The next time you
Okay.
might lose $200.
Okay.
The next time you might lose $50. That math doesn't,
Right.
your losses are kind of all over the place. And with
Mm-hmm.
you being a business person, the number one thing, obviously, we want to keep our expenses down,
Yep.
right? That's
Yep.
number one. So, and we want to be able to the whole control your controllables, right? So we want to control our expenses. Okay. So I want my expenses, I want to know what they're going to be ahead of time.
Yep.
Right. So I know if this trade doesn't work, I lose $100.
Yep.
And cool. I know we call them expense trades because you can't participate in this business without having some losing trades.
Yep. That's a given.
Because
I
a
get that.
computer would have figured it out how to be perfect all the time,
Right.
and it hasn't yet. So there is still some randomness to this. But if you can think of it like that, where you're thinking of it like a business,
Yep.
where I'm going to control my risk, right? I want to keep my expenses down. Then it kind of gets your head in the right
Mm-hmm.
space, because it really does come down to math. If you're right, say every time you're right, you make $100. Every time you're
Yep.
wrong, you lose $100.
Mm-hmm.
Well, as long as you're right 60% of the time, that's it,
Yep.
you're profitable.
Yep.
You see what I'm getting at?
Yep. I
But
do see where you.
if every time you win, you make $100, but every time you lose 200 or 100 or 50 or 500 or 400 or three, it makes it really,
Mm-hmm.
really tough. Okay. Really, really tough. Okay. So that's what candles are.
Okay.
And there is so much online about reading candlesticks,
Oh,
but
okay.
you've got, if you just, that's all it is on a red one, it opened at the top and
Yep.
it closed at the bottom. And
Yep.
during that whole time period, it went all the way up here, went all the way down here, and then closed right there.
I wish the yellows were green because that's my way of thinking. Green is
Yes,
good, red is bad.
that's what I was shooting for. And Sarah,
I'm just gonna imagine it. It's
in my
green.
brain, these are green to me.
We're calling them green.
Yes, we're calling them green.
Yeah.
Okay, so what else? We got about another, I don't know, 20 minutes or so. What other questions
So,
you got?
and this is more just personal. I'm curious. So, when you started out trading and investing,
Mhm.
like as you've gotten better at this, have your losses decreased? Do you still have a lot of losses? Like, on a
I
learning
Oh,
curve where,
sure, that's a
yeah,
fair question. Now I trade futures, which are a little bit different instrument, but it's all the same
Okay.
thing. You buy low and it goes up and you sell
Yep.
and you make money, right? On a good week, like on a really, really good week, I will be 75, 80%.
Okay.
That's a
Okay.
top. I'm killing it. I
Okay.
mean, I've had
Okay.
weeks like I had a couple weeks like 2 weeks ago where I was 100% for like 2 weeks in a
Wow.
row. But that's not sustainable.
Right.
You know what I mean? Unfortunately, it's like when you get one of those weeks, you're like, right on. Well,
Yeah.
hold on there, superstar. Don't get excited. There's too much randomness here.
Yep. Yep.
Enjoy it, move on.
Yep.
But no, I would say on a really, really good week, I average 75 to 80. I would say
Okay.
over the course of like this year so far, I would say I'm at 70%,
Okay.
68 to 70%.
Okay.
So that means, 3 out of 10 times I have a losing trade,
Uh-huh.
right? But therein lies the part I was just talking about, that we have to control the
Yep.
risk and
Yep.
keep our expenses under control. Because if
Yep.
our expenses get out of control and we're getting 3 losses out of 10, those expenses could tank
Right.
everything else.
Okay.
Yeah. What other
Makes
question you got?
sense. I mean, for someone that's beginning, I mean, I guess this is kind of personal, but quite judgment, but what is a good amount to start with getting into the stock market? I mean, what do you
It
suggest the average person get in with?
Sure. It all depends again on what type of trading you want to do. If you want to day trade,
Yeah.
okay. Now there is the day trading rule, which if you're going to day trade stocks,
Yep.
okay, and we still understand the difference between day trade,
Yep.
swing trade, all that. Okay, so if you want to day trade stocks, you're allowed, if you're at $25,000 in your account or under, you're only allowed to do 3 a week.
3 trades.
Yes, 3 day trades where you open and close in the same day.
Okay.
But if your account is over 25,000, you
Okay.
can do as many day trades as you want.
Okay.
Okay. Now, on the swing trading side of it,
Yeah.
since we are not opening and closing them in the same day,
Correct.
you you can have as infinite.
Infinite. Okay.
Yeah. The only rule is that day trade part.
Got it.
Okay.
Okay.
So people can start with whatever they want. Now, one of the beauties is that a lot of online brokers now, actually the majority of them, you don't have to buy full shares anymore.
Oh,
You
okay.
can buy partial shares. You just invest money, like I was just telling you about, like on that Exxon
Yep.
example. So you just invest X amount and it just buys that percentage
Oh. Okay.
of, if you have a stock that's $100 and you invest 90, then you're going to own 90% of one share.
Got it. Which would make sense because some of these, I'm looking at some of these and I'm like, how do people have the money
Oh,
to
it's super
buy a
expensive.
full share like Netflix? I mean,
Yeah,
one share is almost $900. Good
exactly. It's
God.
ridiculous. It's absolutely ridiculous. Yeah. So depending on what type of, like when I started, okay, I
Yeah.
started in the swing trading mindset. That's
Okay.
why I was
Okay.
okay, and I started with 2 grand.
Okay.
Okay. And that was enough, but that 2 grand that was the learning process, right? I wasn't
Right.
trying to make a ton. Well, I was trying to make a ton of money, but my teacher at the time was like, quit trying to make money. You're trying to learn here, right?
Right.
So, and that's what I used, to start learning. So on the swing trading side and the investment side, you can start with literally a lot of these online investors. I have one that I use that I send to my kids too, and they use it's called Stash,
Okay.
STASH. You can start for as little as $5.
Oh, wow. Okay.
Okay. And up to whatever you want. Right.
Okay.
But a lot of people, it's about kind of like we were talking about the last session.
Yeah.
like with some of the women you were talking about, like some of them, it's just about taking that initial step,
Yep.
right? And getting into it, whether it be with $5 or $10,
Mm-hmm.
right? And then you start to see how the whole rigmarole
Yep.
works. And all of a sudden you open up your phone and you're like, man, the $10 I've invested made, 8 cents. I
Right.
didn't
Right.
do anything.
Right.
That's kind of a cool, it's like the first time you put money away and you see it earn interest, you're like, man, it's
Mm-hmm.
making money. I didn't do anything. Right. So, my thing is you definitely want to get people involved. And with such a low cost of entry,
Mm-hmm.
right, on some of these, people can start, the process of understanding how all this works. And once
Mm-hmm.
they're engaged, right, then it really starts to kind of,
Mm-hmm.
your head starts to kind of figure it out, right?
Right.
So
But I
from
like,
five
yeah.
bucks,
Yeah.
to whatever.
Okay. But I like the idea of the $5 because then as you're learning, you're not necessarily losing as much
Yeah. Oh,
as you're
absolutely. Well,
learning and you're getting the idea.
one of the neat things too is I would say every single broker has what's called a paper trading platform.
Okay.
Okay. And a paper trading platform is the platform you trade on is exactly like the real
Okay.
platform.
Okay.
The prices you're watching are the actual prices of the markets.
Okay.
But the money that you're trading is simulated money.
Oh, okay. So it's a
So
good way to learn.
you can push all the buttons, try all the
I
stuff,
like that.
start to learn how everything works. And it's just, that's what I call it paper. It's
Okay.
not real, right?
Okay.
You could put, I'd like to start my account with $10 billion and you could trade
Right.
with, but that's the way 99.99% of people start doing this is they'll start paper trading. So if you
Got
hear
it.
that term, paper trading,
It's like,
it's like a trading video game.
yeah. I'm thinking of it like paper, like for money in Monopoly. So you're just
Yes.
kind of using pretend money.
It is.
Yeah. Yeah.
The cool thing is, yeah, it's exactly the same as trading for real, 100% exact, except the money you see in the account is just numbers.
Got it. Okay.
Yeah.
Interesting. I like that. That's a little safer.
Yes. So you don't
And
have to start
but
out
you're
with real.
learning. And then you're learning as you're doing it.
But takeaways from today, you tell me what,
Oh
and
my
if there's
gosh,
anything more.
so much. No, it was so great. So, I mean, honestly, a lot of it is understanding these terms because I hear all this stuff and I'm like, what the hell is that? So,
Mm-hmm.
understanding the day trading, the swing trading, and the investing, huge for me, and understanding obviously the importance of each and what you're doing in each one, that was huge. Um, Really big for me to learn there's the paper trading because that makes me
Mm-hmm.
feel a little less scared to do this.
Oh yeah.
Um, and then I really, I'll be honest, I enjoyed learning about the candlesticks because now I feel like I could actually look at this and understand what it means. For me, I'm a simple person, so I like the idea of the yellow being green. So green is good, red being not
Yep.
good, and
That's the
understanding
point.
the
Right.
difference between the two, understanding what the wicks are. Um, I mean, granted, this doesn't mean I can go out and trade, but it's helping me build that foundation so I can understand what the hell you're talking about and what's actually going on in here. It's amazing. This is awesome. Like I feel like I'm much further than I ever was before.
Well, good.
Yeah, this is, I mean, I could actually look at this and not feel like a total idiot and go, what the
Yeah, now you
hell
can
is
look at
that?
this and say, yeah, price opened on, and like if we
Absolutely.
look, now we're looking at the daily chart, so let's look
Right,
at a 1 hour. So the only difference on the 1 hour is each one of these candles now is an hour
right.
instead of a day.
Yep,
That's it. And I mean,
yep.
you can go all the way down, to 1 minute,
Yeah,
right? And there's a 1 minute candle, but it all means the same.
right.
It's just the
Oh,
time, it's just the
yep.
time frame you're looking at. Okay.
Next session, you're going to have to help me understand because I keep seeing that word about futures.
Oh, if you what are futures? Yeah.
Yeah.
Yeah, they're really easy. Once you understand, that's what most efficient way to day trade. Okay, it's
Okay.
the absolute most efficient, cleanest way to day trade. But if you don't have the knowledge that we're learning, you're going to get steamrolled like really fast.
Yeah, I
Right.
can imagine.
Yep.
Okay.
But yeah, okay. So any other questions before we?
No. Oh, the other thing I loved learning today, the stop loss. That was great too,
Yep.
understanding that piece, because all of this makes me feel a little safer with all
Yeah.
of
And the stop
this.
loss is our best friend, right?
Absolutely. It
Because
saves your butt.
yes, because we understand, put this phrase in your head forever.
Okay.
We are never smarter after we're in a trade.
Okay.
Because what generates, once we're in a trade and we see money going up and down, we get
Yep. Stupid.
emotional, irrational.
Right.
But when we're looking at it to start with, we're objective,
Yeah.
right? So the
Yep.
having
Yep.
that stop loss in place before we get in the trade
Yep. Yep.
keeps
Smart.
us, because like I said, we never get smarter
No.
once we're in it,
Yep.
right? But yeah, that's there to protect us.
That'll be my security. That'll be like my security blanket is the
Oh,
stop
absolutely.
loss.
I never, other than investments, I never, ever make a trade that doesn't have a stop loss in place.
Yeah.
I have in the past, like way back when I
Oof.
started, because I'm like, I don't need these. I'll just get out when it gets to this
Oh.
level. And then it's getting to that level, and you start thinking, well, wait a second, I don't want to get out yet.
Oh
I don't want to
no.
get out yet. And it's just the more emotion we can take out of it,